Greetings, Dr. Jeffrey Scott here. This is my weekend market update for December 26, 2025. I hope you all had a safe and healthy and happy holiday season so far. Hanukkah's done, Christmas is done, and now we got New Year's coming. I'm looking forward to having a week away from work and spend with my lovely wife. We had family in for the first part of the holidays and just the two of us for the rest. Stocks end a decent week in muted fashion. No surprise, you'd expect the Friday after Christmas to be quiet, and the metals continue to melt up. Again, my name's Jeffrey Scott, marketmripro@gmail.com. Google group is called Top Down Trader, and website's marketmripro.com. On Tuesday, the 30th, I think at 2 p.m. Eastern, let me verify that, I'm going to be doing a special session with my friends at Pick Plays Marketplace from 2 to 3:30. Um, going to extend the Black Friday sale on Market MRI Pro through the 5th of January, and then it goes up, as we talked about before, to 26.90. So this will be the closest you get to a half off at 14.95, and it's going to come with some extra goodies as a special thank you to the Tip Plays folks for setting it up. Look for links. I'll put one out in YouTube and one in Top Down Trader group as soon as I get it, and I'm sure they have a massive mailing list, so you might see it as well. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them, specifically my tools. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention, and trading stocks and options should be considered risky. You should always consult with your financial advisor before committing your hard-earned cash. If you're looking for the wealth charts video, it will be out on Monday morning. I'll do it sometime after futures come out on Sunday. My Google group is called Top Down Trader. It's sort of a loose group. You control whether you're in or out. You just go to Google Groups, look, find all groups, join Top Down Trader. The only thing that I do is I monitor your emails for a while, or your not your emails, but your group messages, because we've been spammed a couple of times. Um, and you can come and go as you please from the group. I'll give discounts from time to time, especially if we're not offering a sale price. You'll get invited to some closed educational sessions, and I don't always put everything up on YouTube. Anything on the recession front? No, I mean, we talk about it every week, the 10 minus 3 month, 10 minus 2 years. Everybody knows they inverted, which means they got below the black line. We know they've gone back above it, and the gray bars are recessions. And going back to the 80s, every time you do that, cross below and then come back up, below and come back up, you get a recession, and sometimes it takes a while. So it'll be interesting to see what happens here. From a credit tightness, nothing here which says that's a good thing, because you could argue that the gray bar being recessions, when it peaks, yeah, it does, but it starts coming up before then. And then the diffusion index, as long as it's above minus 20, we're probably okay. And this month for December, actual data came in at minus 10. I watch that because recessions start when we're minus 20. So right now, no evidence of recession, although I'm in the camp that we could get one in 26. Know your news and earnings. We got back looking Case-Shiller for October. Can't imagine that does much. Pending home sales probably be weak. We got PMI for December. We got the Fed minutes for December. Again, I think we know what we're going to find is less people want to cut, more people want to hold and sit there. And then probably the biggest data point of the week is going to be New Year's Eve at 8:30 a.m. when we get the initial jobless claims. No earnings to speak of for the week, and it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go take a look at the charts. I will be doing a meeting in late October, early November, perhaps with one of my friends, who I'll announce later if we do a dual meeting. We've done them in the past. And the other thing is we sent out a query on Top Down Trader today for folks to ask about a March date to do something on the West Coast. For those who've not been to my live meetings, on the West Coast, I speak maybe 40 to 50% of the time. I invite a bunch of friends to speak. Last year we had Matt Caruso and John Person, powerful people, really good people, among others who I got to participate. And that's a low budget meeting at a residence inn for like $400 per person. The meeting in Florida, I do at a nicer hotel and I feed you. It's a little bit more money, but I speak a lot more. So um, we'll get more information when it becomes available. I wanted to call out the hamburger menu up here. And when you click on it, you're going to see three things. New layouts, you've seen that before, how to start a new layout. Settings, which are being worked on, so there's nothing there. But we added this thing, we being Praveen, called What's New. And whenever you see an update, all you got to do is go in and it'll tell you what's happened, what's different this time. And you'll also notice you got a startup disclaimer. Now that we're getting larger audience and not everybody's a personal relationship anymore, we thought it would make sense to put in the typical disclaimers that people like to have. So that's in there every time you start the program. It's not too annoying. I've been dealing with it, and you click it once for your sessions. Hopefully, you guys will understand why I do that. If we look at the market on Friday, you could see not a whole lot of movement if you look at one-day changes. The winner was Bitcoin up 0.3%, the dollar up 0.07%, diamonds flat, spiders flat, Q's flat, volatility down a bit, and Russell down 0.5%. So that's what we saw. Even if you look at the lows and the highs for the equities, nothing was above or below 1%. Closing ranges were kind of in the middle on most. Um, New NYSE 12-month new highs minus new lows, hardly any new lows, very positive, but not a lot of new highs. NASDAQ new highs minus new lows. They still got a fair number of new lows and minus 22. If we looked at the S&P sectors, again, nothing more than 0.6 and nothing less than 0.5. S&P materials were up 0.59, 0.2 for real estate, 0.1 for healthcare, 0.16 for healthcare rather, 0.16 for tech, and 0.14 for staples. The laggards were discretionary, energy, financials, but you can see nothing with a big move. If we look at thematically, what lead, gold, silver, copper, cannabis, lithium, and China discretionary, the ones above 1%. And if we look at what lagged on the session, uranium, blockchain, biotech, aerospace, biotech, and genomics, oil exploration. But again, very few things with profound moves, except for the very top one, silver and copper. Metals, metals are almost would say are out of control. If you look at Friday versus Wednesday, because remember markets closed Thursday, the number of sectors, industry groups across the major indices did worse on Friday, and breadth was down. 49% advances in the S&P 1500, 38% in the Nasdaq, 49 on the NYSE. So more than half the stocks were down. So did we move much? No, it's kind of a nothing burger day. Again, what you expect over the holidays, and I'm not sure we'll see a whole lot different this coming week. Maybe the markets will start melting up with the metals. If we look at the timing model, I wouldn't expect to change because it's just nothing's happening. And you could see here a little doji on the spiders, but setting an intraday all-time high. And the dojis were um, dojis. The spiders relatively flat, as was the Qs, almost the same story. Not quite a doji, but kind of a up top and bottom tail, both above the WMA. Russell's been pulling back towards it. Had a little bit of a bottoming tail. Maybe that'll give us a boost come Monday, and the diamonds are in a gradual uptrend. Really, nothing has changed. All of them are in a daily buy, which is the green and red. although the bongo did flip today on the Russell. On the weekly, we got weekly buys. So uptrend still intact. Probably not a great place to be shorting without more damage occurring or more evidence that something's wrong. Time will come. Count on it. If we look at the spiders, nice uptrend continues. And you could see that for the most part, even though little pullbacks here, maybe in the beginning of January, you see the trend is higher for seasonality, looking at the 5 and 10-year seasonality. Is there anything nefarious about this chart? No, it's above the 17, which is above the 50, it's above the 100 and above the 200. Looks fine. If we look at the Qs, similar thing where their seasonality is okay here, although it's not a straight shot. And really nothing burger today. Holding on looks fine. If I look at the diamonds, probably looks the best of them, not far off of all-time highs, and they were flat like most of the others today. But again, above the 17, the 50, and the 200 and the 100 here. The Russell's been the one that's been pulling back some, and you could see still above the 17 or closing on the 17, above the 100 and the 50, 100, and 200. Again, do I see anything that says breakdown ahead? No. I think it's likely for all of these at some point to slow down or pull back, but I'll wait for the signals to say danger, danger. Don't see them right now. One thing that I watch closely is the VIX, and the VIX opened higher, closed lower, and was down some today. Actually, was it down? Is it up a little bit? Let me see. I can't remember. Yeah, down 0.33. Let me go back to US index ETFs. I think is on a, yeah, it's a daily. So down a bit and kind of at the area that you like to see it resting at, although a move up from here, we'll definitely have to pay attention to. If we look at commodities, gold, big day today for gold. Doji after a big gap up is at the beginning of an evening star and a reversal. I've taken profits on a lot of my gold. I did today, especially with that candle. Still probably goes much higher, but maybe short term we got a pullback coming. If you look at silver, I mean, how many things go up like that and stay that way? The fact that it closed at its high has to make you feel good about it. But a massive move by silver up 9%. Is this going to be your classic high volume climax move? And we're going to see a sell off next week. Again, I don't expect it, but it certainly would not be a big shock to me. If we look at oil's just bouncing around. It popped out of this wedge and couldn't get back in. Not much going on there. Natural gas is going up. So you had this kind of a hammer-like bar. We've moved up. We'll see if it can't get through those moving averages. If we look at the 10-year, 10-year was up just a teeny bit after opening significantly lower today. And the 30-year bounced off the 200 and was actually up a little bit more. I think it was up 0.52, but still well below 5%, so nothing too serious looking there. So I'd put it together and say low volatility, low volume, not much movement except for gold, silver, copper, some palladium, some of the other platinum, some of the other metals. Um, but I don't see any sign that the market's fractured and it's time to go short. Have I raised cash? Absolutely. Why? Because, well, we had some Hindenburg omens, whether they're real or not. And also because it's tax time and I got to raise some cash to pay my taxes from this year. Not a bad problem to have. No complaints. My bucket analysis, I would say neutral. Very neutral. Nothing to be concerned about. If I look at market breadth, we saw new highs again on the NYSE. how bad can the markets be when everything's close to all-time highs? Give this a second to load. There you go. So you could see here, probably an all-time closing high, 22,246. 22, 240, 29. Yes, we got an all-time closing high in the NYSE on the left, but on very low volume. Moving up nicely on the NASDAQ composite as well, also low volume. Not much movement in the stocks above the moving averages and very mixed down below. New highs minus new lows. Positive on the NYSE, negative on the NASDAQ. AD line, positive on the NYSE, negative on the NASDAQ. Up, down, positive on the NYSE, volume, and negative on the NASDAQ. Here were the recent Hindenburgs, which I'm not sure they're real. Um, we basically strip a lot of things out of our NYSE, and I couldn't reproduce it on the other platform, so I'm a little bit cautious on those. But very different looking patterns. This one looks like it wants to go higher. This one's giving us some breadth concerns. If we look at the market breadth new high, new low 13-week, it's kind of interesting to me because I like 91 tells me the spider's getting a little bit overbought, not at a reversal area or not at a certainty reversal area, but getting a little bit ripe. We're at 81 on the SP 1500, not an issue. Only 27 on the NASDAQ, getting closer and closer to where you expect it to go higher. And then in the middle at 63 on the Russell 2000. So maybe that NASDAQ is going to be the one that turns around this coming week. I look in the sector timing non-ratio charts, and I look for any new signals on the daily charts. I don't see any new signals today. And I've just been adding this to my evaluation, but I'm really just looking for new stuff. And then if I look at my key stock timing model, let's look at some of my favorite stocks. And this is just looking at them with the timing model. So Amazon is finally broken up. I mean, kind of looks like a head and shoulders top more than anything else to me, but broke out above the moving averages. So I am long Amazon. Apple, I like to see it get above the 50. I'm also long Apple. Who isn't? Google, maybe the best of the bunch, pull back in a major uptrend. Probably actionable here. Meta trying to get back, still well off its prior highs. Netflix just kills me that they're doing this acquisition right during Netflix seasonality time, but it's hard to play seasonality when you're in the midst of a bidding war for Paramount, or excuse me, for Warner Brothers with Paramount. And right now, I can't touch Netflix. Tesla, another strong one, a little bit of a pullback here. Nothing broken yet. And NVIDIA had a nice breakout as the AI trade appeared to come back. So maybe NVIDIA's deaths was a little bit premature, the concerns about it, and they made an acquisition today that a lot of people were excited about. Grok picking up a TPM chip to compete with Google was how I understood it. Microsoft, that's embarrassing, broke above the WMA, and you could see is now in a buy mode. Certainly the cheapest of these from the perspective of it's in a buy mode, but well off the highs. Struggling to see above 500. Biotech, yeah, it's been getting choppy up here. Biotech usually is good for me until the middle of January. And often, if there's going to be any deals, they occur in the first couple of weeks because of the JP Morgan Healthcare Conference, which I think starts like the 13th or 14th this year. So I've taken profits along the way, but I still have a significant position there. And it hurt a little bit today, especially early on. Pharma, it just amazes me how good stocks like Merck look, AbbVie, Lilly, considering all the things that are coming out of Washington. But maybe it's the sell the rumor, buy the news, and maybe it's not as bad as people thought. Still looks great. And data centers, yeah, I'm looking for that one to break out here. Um, and it's not really giving us a clean breakout yet, although it's gone to a buy signal. So I like to do that and look at some of these. Quantum, similar to data centers. I thought something was happening. Of course, it suckered a lot of people in on this gap up, and it's just been pulling back. These are Rigetti, Qubits, and other companies that have minimal to no revenue and no earnings and no sight of those coming. But boy, they're hot stocks, and the market just loves them from time to time, not necessarily all the time. All right, if I go into the JES layout, I'm really hesitant to look at a lot of stocks today. It is not, it's not a scenario with this slow, boring 2 weeks that a lot of things are giving good setups. We just talked about some of the big ones: Amazon, Nvidia, Microsoft, Google, probably all actionable right now. So I did find a couple of things, but when I first thing is I did the top-down analysis, so I went over to top-down, a lot of stocks, 3,457, but off the highs because volume is low. And if you look at percentage movement, there wasn't a lot of movement up, and basic materials, no surprise, was the big one. So then I decided, let's just look at FM2, and it's healthcare, basic materials, cyclicals. And then let's do FM2 again, and let's look at, oh, that's not giving me what I want, unless that's a 10. There we go. Let's just 1, 2, 3, 4. So these are their top 10, and you look at them, no surprise. Silver, copper, and gold, other precious metals, aluminum, apparel, footwear, that's kind of unusual to see, chemicals, packaging, and drug manufacturers. CBOE, I don't even know it's on this list, but I was just looking at it, and I actually thought this looked kind of interesting. They charge a lot of money, so they're probably making it too. Oh, come on, really? No fundamentals on CBOE? Well, it's a global markets, future markets, breaking out of a flag there. Seasonality, not too bad. I thought CBOE looked good, but over here, let's just rank these by the 2-day force. Well, it's more than just force. UPC, let's just go down the list and see if anything looked good because there were a couple DVACs as a takeout. United Healthcare looks interesting. I did notice that you also had Elevance coming up in a second. That must be a takeout or a split. Elevance, a big Blue Cross in 14 states. Can't say anything bad about them or good about them because I work with them. But this one, if either of these break above the 200, that's intriguing. Ago, a minor all-time highs, I believe, an IPO, not the world's biggest company, makes money. How could they not make money? Pays a $2 or 2.43% dividend, multiple of 16. It's an IPO, so I don't have a whole lot of fundamentals. I mean, you need to have gold and silver in your portfolio. One that I have is Pan American Steel, which is this one. I don't know if I could buy it here. I can certainly hold it here and see what happens with the craziness going on in metals. Southern Copper, boy, this thing's had a big move. And you got to figure if you're actually creating new copper, you're going to have good earnings per share growth. This is about 40%, trades at a multiple of 25, pays a dividend of 2.35%. I think SCCO still looks good. Put that in my buy list. ELE, Elemental Royalty. Is this another gold stock? Let's see. Yep, a lot of these little ones are coming to play now. Wheat, precious metals, a silver stock. HYMC, a minor. AEM, one that I like as well. Why? Because at least it went sideways before it broke out. This one looks good. And we can see it's got 201 coming in versus $1.26, and it pays a 1.72. FCX, that's what I think of when I think about copper. And we can see that FCX is just on fire. Deckers, footwear and other accessories, kind of like UNH and Elevance. If it breaks above the 200, it gets my interest. Nike, bottom fish, moved off the bottom, but not a thing that I typically would buy. And another one I liked was this Aero Copper, nice uptrend. It's a smaller cap stock. So those are the things that I saw. No surprise, gold, silver, copper, and the payers were a bit of a surprise. I'm kind of curious about copper, so I'm pretending. But let's say I wanted to look at the copper stocks. If I just click copper, these are the one that's in our data set. Southern Copper to the moon. Freeport McMoRan to the moon. Arrow not yet launched, but looks good. Hub Bay to the moon. And Taseko to the moon. So clearly a good place to be in. As I mentioned, metals are melting up, and melting is not a long-term sustainable condition. I'll just put it that way. If I want to look at from the bottoms up perspective, not a lot comes up. Let's just look at the A plus. And this first one is a dead ticker. It's been taken out, but it needs to be removed. Universal Pharma, a big move here after a long base. I don't know anything about it. Not that exciting. Zeta looks interesting here. Um, Breaking out here. It's a choppy stock. What does it do? I think it's in logistics and trucking. Oh, this one is this is the this is big data being used against you from a marketing perspective, but companies pay for it. That's what matters. So that was one that looks interesting. Probably that in the that little copper play. Excuse me. And then over on the A's, this one looked interesting. GSIT Technology. I do my own research, but I kind of like this. If it trades above the 50, seasonality doesn't help me much. And have volume breakout momentum coming out of a squeeze. Good relative strength in OBV and not extended. That's one I like that look a lot. I'm not buying Jack in the Box. I won't buy their burgers, but if they break above the 200, it might be interesting. And that Zeta again. So I wish I had more to show you. I think that there are some that look good. The Zeta, that ORE, I think was a ticker for that small copper player, GSIT, and what was that A plus stock we liked? Well, Zeta being the only one that's in both of them. The other A plus was, yeah, that's it. All right, have a great day. Sorry I don't have that much enthusiasm and excitement here. It's not that I don't love the markets, it's just that kind of a boring period. Not a lot of news, which is good. Not a lot of earnings. Eh, I like trading earnings. Um, Not a lot happening. Have a great weekend. Don't spend too much time worrying about the market. I think next week's going to look like this week. Not a lot of anything. Take care, everybody, and look for that link for that Tuesday webinar.